Tensions in the Middle East escalate as Iran faces renewed military actions. Meanwhile, Wall Street reflects investor sentiment amidst upcoming earnings reports. From economic shifts to geopolitical conflicts, here are today's top 10 stories you need to know. The stock market is currently facing significant volatility, with major indices experiencing fluctuations due to various economic pressures. Analysts have noted that the S&P 500, Nasdaq, and Dow are all trading in the red amid a tech sell-off that has raised concerns among investors. The recent downturn reflects broader anxieties about inflation, interest rates, and geopolitical tensions, particularly in the Middle East. As investors react to these developments, market sentiment remains cautious, leading to increased trading activity. Many are adjusting their portfolios in anticipation of further market shifts. Despite the current challenges, some experts believe that opportunities may arise for savvy investors willing to navigate the volatility. The coming days will be critical as markets attempt to find direction amidst ongoing uncertainties. Stakeholders are advised to keep a close eye on economic indicators that could signal potential recovery or further decline. Two Israeli quantum startups are in advanced talks for potential listings on Wall Street, driven by a surge of interest in quantum computing technologies. Quantum Art and Classique are reportedly negotiating SPAC mergers that could value each company at up to $5 billion. The growing demand for innovative quantum solutions has attracted significant investment in this emerging sector. As these companies prepare for public offerings, analysts are keen to see how they will navigate the competitive landscape and distinguish themselves in the market. The success of these IPOs could signal a turning point for the quantum industry, potentially leading to further investments and advancements in this technology. Investors are closely watching developments, as the potential for groundbreaking applications in various fields could position these companies at the forefront of technology innovation. The coming months will be crucial as these startups finalize their plans and seek to capture the attention of investors on a global scale. Wells Fargo is set to announce its second quarter earnings, with analysts eagerly awaiting the results. After a tumultuous period for the banking sector, expectations are high for the financial giant to deliver strong performance metrics. The earnings report will provide insight into the bank's resilience and ability to navigate changing economic conditions. Investors are particularly focused on indicators such as loan growth, credit quality, and any updates regarding regulatory challenges. The results may also influence market sentiment toward other financial institutions as they prepare to release their own earnings. As the banking sector grapples with inflation and interest rate concerns, Wells Fargo's performance could signal broader trends in the industry. The upcoming announcement is anticipated to have significant implications for both investors and stakeholders alike. In the coming days, the focus will be on how Wells Fargo addresses current challenges and what strategies it plans to implement moving forward. The conflict in Ukraine has intensified, with new offensives reported by both Ukrainian forces and Russian military units. This escalation marks a troubling development in a war that has already caused significant humanitarian and geopolitical crises. Recent reports indicate that fighting has spread to key regions, with heavy casualties on both sides. The international community is expressing increasing concern over the humanitarian impact as civilians continue to bear the brunt of the conflict. Aid organizations are struggling to provide relief amid ongoing violence, heightening the urgency for diplomatic intervention. As global leaders call for an immediate ceasefire, the possibility of renewed peace talks remains uncertain. Analysts suggest that without meaningful dialogue, the potential for further escalation could lead to dire consequences for regional stability. The coming weeks will be critical in determining whether diplomatic efforts can yield results or if the fighting will continue unabated. The recent IPO of SK Hynix has generated significant buzz in the financial markets, with investors eager to participate in the latest advancements in the semiconductor industry. As one of the leading memory chip manufacturers, SK Hynix's public offering is seen as a bellwether for the tech sector's resilience. The company raised an impressive $26.5 billion reflecting strong demand amid a burgeoning market for AI technologies. Investors are particularly optimistic about the future growth prospects of SK Hynix, given the increasing reliance on advanced semiconductor solutions across various industries. However, market analysts caution that the stock's performance will be closely linked to broader economic conditions and the ongoing supply chain challenges. As the semiconductor industry continues to evolve, the success of SK Hynix's IPO may pave the way for future listings in this vital sector. The coming months will reveal whether the excitement surrounding this IPO translates into sustained market performance. In a surprising turn, SpaceX's stock has dropped following its recent inclusion in the Nasdaq 100 index. This milestone, often celebrated as a sign of a company's growing credibility, has been overshadowed by a broader tech sell-off that has impacted numerous companies within the sector. Analysts suggest that this decline reflects heightened investor concerns about the sustainability of SpaceX's remarkable growth trajectory, particularly as competition in the aerospace industry intensifies with new entrants and technological advancements. Additionally, the current market dynamics are shifting, influenced by rising inflation and ongoing geopolitical tensions, which have contributed to an overall risk-averse sentiment among investors. As SpaceX navigates these challenges, the company's leadership faces the crucial task of reassuring stakeholders about its long-term vision and financial stability. The upcoming announcements regarding new projects, including potential partnerships and innovations in space travel, will be pivotal in restoring investor confidence. In the coming weeks, SpaceX must effectively communicate its strategies to stabilize its stock performance and reinforce its position as a leader in the aerospace industry. The recent military actions involving Iran have sent shockwaves through global oil markets, raising concerns about potential supply disruptions. Iran, a pivotal player in the Middle East, holds significant influence over oil production and exports. As tensions escalate, crude oil prices surged, reflecting fears of instability in one of the world's key oil-producing regions. Analysts warn that if military conflicts persist, the implications for oil supply could be dire, potentially driving prices even higher. Countries dependent on imported oil are particularly vulnerable to these fluctuations, which could impact everything from transportation costs to consumer prices. The Organization of the Petroleum Exporting Countries, or OPEC, is closely monitoring the situation, as any significant disruption could lead to coordinated actions among member states to stabilize the market. As nations scramble to secure their energy supplies, the geopolitical landscape is shifting, with alternative energy sources becoming increasingly relevant. In the coming weeks, the focus will be on whether diplomatic efforts can de-escalate tensions or if further military actions will lead to protracted economic instability. As the earnings season approaches, Wall Street is bracing for a wave of financial reports that could shape market trends for the coming months. Analysts are particularly focused on tech companies, which have been under scrutiny following a recent sell-off. With major companies set to release their quarterly results, investor sentiment is mixed. Some believe that strong earnings could revive confidence in the market, while others remain cautious given the current economic backdrop. Additionally, the tech sector's performance will be closely monitored, especially after recent volatility was sparked by geopolitical tensions and inflation fears. Experts are predicting that companies with robust earnings growth may outperform their peers, potentially leading to a market rebound. However, the broader economic environment, including consumer spending and inflationary pressures, will play a significant role in influencing outcomes. As investors prepare, many are considering strategic adjustments to their portfolios based on projected earnings and market responses. The coming weeks will undoubtedly be pivotal in determining the direction of the markets. The Federal Reserve has confirmed that inflation rates in the United States have reached new highs, significantly exceeding the central bank's target of 2%. This surge in inflation reflects a broader trend affecting global economies, exacerbated by rising energy costs and ongoing supply chain disruptions stemming from the pandemic. The impact of these factors has been felt across various sectors, from food prices to housing costs, placing additional financial strain on American households. As inflation continues to rise, the Fed faces increasing pressure to adjust its monetary policy to curb these soaring prices. Recent reports indicate that the likelihood of an interest rate hike is growing, with experts predicting that rates may be raised as early as September. Such a shift could have profound implications for consumer spending and investment strategies, potentially slowing economic growth. Many economists express concerns that persistent inflation might hinder the ongoing recovery from the pandemic-induced recession, raising the specter of a downturn if not managed effectively. Investors are closely monitoring the Fed's actions, as even minor adjustments in interest rates can trigger significant market reactions. Looking ahead, the Fed must navigate the delicate balance between controlling inflation and fostering an environment conducive to sustainable economic growth. In a significant escalation of tensions, the United States has conducted military strikes against Iranian infrastructure. This response follows a series of provocations attributed to Iranian forces, including attacks on U.S. assets and allies in the region. The strikes have reportedly targeted key military installations and supply routes that are believed to facilitate Iran's operations throughout the Middle East. This development comes amidst ongoing concerns about Iran's nuclear ambitions, which have drawn widespread condemnation and sanctions from the international community. Analysts suggest that this military action could exacerbate an already volatile situation, with potential repercussions for global oil markets and diplomatic relations, particularly with U.S. allies in Europe and the Gulf. The Iranian government has vowed to retaliate, signaling a likely increase in hostilities. Regional allies, including Israel and Saudi Arabia, are closely monitoring the situation, as the balance of power in the region hangs in the balance. As the U.S. maintains its stance against Iranian aggression, experts warn that further escalation could lead to a broader conflict, drawing in multiple nations and destabilizing the region. The coming days will be crucial, as diplomatic efforts must now work against a backdrop of military action, determining whether tensions can be de-escalated or if a cycle of retaliation will ensue. Thank you for joining us today. Which of these stories surprised you the most? Don't forget to like and subscribe for more in-depth news coverage.